Welcome to our 317th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. So the way this call works is this is an AMA. Like you see on Reddit, you can ask me anything. You can ask me business questions, finance questions, investing questions, startup questions, personal growth questions, any questions you want to. And my humble goal is to help you take your career, your startup, your personal growth and happiness to the next level. Without further ado, let's begin. Thank you for your patience. Last week, I was out at a wedding. For a really good friend of mine, Luca Ennison, who's taught many courses with me on AI. I was in Belgrade. Quick housekeeping announcement before I get to your questions. Please keep typing them. Is tomorrow morning at 9 a.m. Pacific time, I'm dropping my Wall Street Pro, humbly, reacts to the Big Short movie. We spent a lot of time putting this together. I demystify and explain mortgage-backed securities, CDOs, credit swaps, etc. From scratch. Look for that tomorrow morning. Without further ado, let me get to your questions, and thank you. All right, Andre, good morning. Great to see you as well. Peter wrote, hey, Chris, I noticed that this week the S&P 500 is just about back to where it was before the tariffs news hit. Glad I didn't panic sell. Where do you see it going from here? Yeah, so for many years, I've been saying with love in my heart that day trading does not work. And the reason is because there's black swan events, meaning very rare events that occur that we just can't forecast. We don't know what Trump is going to say next, or any political leader is going to say next, or what the next economic data point will be. So what I want you all to do, please, and this has humbly served me well, is whenever you invest in a company, I want you to focus on your target price many years from now. And I want you to tell yourself, I don't care about the path, I care about the destination. And buying and holding over long periods of times helps you out materially. In fact, if all you did was you bought the S&P 500 index fund, ticker VOO, which has very low fees. If that's all you did, and you maxed out your 401k retirement savings program just over $20K every year, then in 20 years, you would have over $1 million. And you'd sleep at night as well. You're not watching the market go up and down, driving you crazy. There's no Jedi mind trick to make the stocks move when you watch them. Now, if your spouse did it as well, meaning maxed out their 401k, then what happens is you would have $2 million in 20 years. Okay. Now, when you guys have kids, I recommend you do this as well. So I have 3 boys. You can max out the retirement, their educational savings account every year as well. A maximum of $15,000 per child. It's a lot. I know you can't do it every year. But if you do that for 15 years, or 18 years, I should say, for one kid before they go to university, then with an S&P 500 average return of 15%, which it is roughly in the long run, you'd have $700,000 per kid. Okay? So if you max out your 401k for yourself and your spouse, that's $2 million. If you do it for 3 kids, it's tough to do every year. That's an additional $2.1 million. So you got $4.1 million in 20 years, plus the appreciation on your house as well. Let me just turn this off here. Every phone call I get seems to be a scam. Yeah. So I hope that answers your question. I don't know the path. I know the destination. I know that the very last company on the planet, so to speak, to ever go bankrupt would be the U.S. government. And I think that U.S. corporations are, of course, much better run than the United States government. So buy the S&P 500, put it away after you do your research, and don't worry about it. Hakuna Matata. Okay. So I don't think the S&P is going to be up every year, of course, but I do believe it'll be up 15 to 20% every year on average for the next couple of decades. And the reason I say that is because with AI, a lot of companies are cutting headcount. And they're making their processes much more efficient, which drops right to the bottom line. Yeah. All right. Next question I've got is, Patrick wrote, hey, Chris, just want to ask something. Sure. I'm currently doing Wall Street Prep Financial Modeling. It's a course, yep, a competitor of mine, and their valuation course. Will this give me the necessary skills for my private equity application? So I've looked at it in detail. I humbly believe that our program is better, humbly. I've worked on Wall Street for many years. I worked at Goldman Sachs for 5 years, worked at big hedge funds, including Citadel, started my own hedge fund, my own venture capital firm, invested in a lot of private companies you guys know now know are public, like Palantir, Facebook, etc. So if you sign up for my program, and if you're interested, go to the link in the description to set up a meeting with one of my staff. And let me show you what you get. One of the things you'll get is a 150-page guide on how to ace your finance interview. Okay, I teach you everything about how to ace your interview. Also, I give you 500 hours of content, and I train you every single weekday. That's right. There's small group meetings every single weekday, 7 hours per week, over 300 hours per year, and you get 7 hours of one-on-ones with me. We use AI a lot as well to help you work smarter and not harder when you're interviewing. I also provide you with every single template you possibly need to create your investment analysis to bring to your interviews, to impress the heck out of your interviewer, and many other templates. Yeah, so again, check it out. Go to the link in the description of this video and set up a call with somebody on my team. We are growing quite fast. If you're interested in working with us in a sales or analyst capacity, you can always send your email or your resume to support@harounventures.com. Still getting over jet lag here. Thank you. All right, next question is, and by the way, people in our program have gotten jobs in Goldman Sachs investment banking at the associate level with just an undergrad, meaning they were in the same start class as Harvard Business School students. People in my program have gotten jobs in venture capital, private equity, many other types of high finance roles, etc. Okay, great. All right, next question is from Javesh. Hey, Javesh, who wrote, hope you had fun with the wedding. Thank you, I did. A little jet lagged. Then you wrote, when do you think is the right time to buy real estate and what indicators should I be watching for? Absolutely. So in my programs, I offer an elective only available on my website through my program called the Complete Real Estate Course. And what I do is I help you to write a full business plan and executive summary, a massive executive summary on any house or apartment or condo before you buy it. Now, in terms of selecting properties to buy, I help you value the property using 5 methodologies, and I also help you with the real estate cycle. So let me go over this really quickly. And by the way, I think the best investment anybody in this call can make is your primary residence because you get the tax write-offs in many countries as well. So there's 2 different phases when you should be buying. Okay, there's 4 different phases. There's the recovery phase, and there's also the expansion phase. Okay, the other stages you shouldn't be buying. And this is based on, and this works in every country in the world. So I did this for one of the many houses I own in Canada. So you want to make sure that when you buy, that prices are falling. Okay, and then you want supply to be high. You want us to just be coming out of recession as well. You want properties to be on the market longer than expected. Unemployment to be peaking, which I think is going to happen soon in Canada. Canada's been hit very hard. I think Canada's in the midst of a recession right now because of what Trump has done to tariffs with Canada, or will be doing. And then you want to make sure that foreclosure rates are on the rise. Okay. And there's other things to look at as well. Again, if you sign up for any of my programs, just go to harounmba.com. This is included. So hopefully that's helpful. But you want to buy when everyone else is freaking out. And as Warren Buffett said, you want to be fearful when others are greedy and greedy when others are fearful. And for me, the first piece of real estate I bought, I was in my 30s, took me a while, I was in New York City. I was working at Goldman Sachs, and I bought right after 9/11. And it felt terrible. And with any, to buy then, and that's the best time to buy. So with any asset class, you want to be a contrarian and buy when it feels terrible. Because if you think about it from a market psychology perspective, with a stock or a piece of real estate, if everybody loves that stock or piece of real estate and everybody owns a stock, for example, there aren't that many incremental investors to push it higher. Be long-term focused. All right, next question I've got is, I have an actively managed Fidelity portfolio across mutual funds. Returns are decent, yeah. Fees are 0.85%, that's pretty high. And expense ratios are reimbursed. Should I switch to index funds? Yeah. So if you look at ticker VOO, the fees are 0.03%. And that's managed by Vanguard. It's an S&P 500 index fund, which I own. Do your research first, please. So what that means, 0.03%, is for every $100 you put into it, you're only paying 3 pennies every year in fees. With that fund you're investing in there, although it doesn't seem very high, it adds up over time. Your fees there are much higher, 82 basis points higher. And it really, really adds up in the long run. Now, before you switch out of your Fidelity retirement account, I want you to make sure that you talk to your accountant. And then sometimes if you work in a big company, human resources allows you to only invest in certain funds, like Fidelity, which is a big corporate client for many HR departments. And make sure there's no tax implications if you were to take your money out. Again, talk to your accountant. And I want everybody in this call, please, and I'm going to get down on my knees. I say this with love in my heart. Hey there, as always. I want you all to have an accountant. Always get somebody to do your accounting for your personal taxes and your business taxes if you have a company. And the reason I say that is because the tax code changes every year. It's changing right now. I'm sure you saw what Congress signed yesterday. And an accountant keeps up to date with all the tax changes. And doing your own accounting, filing your own taxes, is like doing surgery on yourself. It's ludicrous. It's the best investment you'll make, I promise you. Okay. Now, the way to find a great accountant, there's no Yelp for accountants. It's balkanized. You can't find them online. What you can do is always ask a very successful friend of yours, aunt, uncle, etc., who their accountant is, and they'll introduce you. All right, let me get a little bit of water here. All right. All right, next question is, what are your thoughts on applying discounted cash flow analysis only when the markets are down instead of on a fixed schedule? If that's what DCA stands for, please let me know. I teach all about discounted cash flow in my programs on my website as well. I'm not a huge fan of DCF, and the reason is, and I like to value companies using these three methodologies and more. The reason I'm not a big fan is because with discounted cash flow, there's so many unknown variables, like the weighted average cost of capital, the terminal value on your last year of cash flow, etc. And because there's so many independent variables, garbage in, garbage out. So if I were to tell you x plus 1 is 3, what is x? It's 2. If I said x plus 1 plus 3 plus Nintendo sign plus coffee is 3, what is x? We have no idea. There's just too many unknown variables. Now, why do I teach it? I teach it because it's important to understand how to discount future cash flow streams. We also look at net present value as well. Okay. All right, next question is, I'm a data analyst and I also manage some projects. I'm using in-house AI tools, cool. With AI and machine learning on the rise. I'm considering a PMP certificate. What's the best way to future-proof my career from AI impact? Yeah, a couple things. Number one, use AI as your secret weapon to work smarter and not harder, okay, to accomplish more in less time. Number two, and this is going to sound out there, but I don't think it makes sense to study computer science anymore. Because what's happening, at least here in the Bay Area where I live, is big companies like Meta, meaning Facebook, are firing thousands of engineers because of AI. In fact, Jensen Huang, the brilliant CEO and founder of NVIDIA, was interviewed recently, and he said, please don't study computer science anymore because AI will do this. And what Jensen Huang has said also is, in his opinion, he thinks the American education system is going to pass the rest of the world in the next decade. And the reason he says that is because in the United States universities, unlike other countries, you don't declare a major usually when you first start. You declare a major in the third year. And so what you do before then is you study liberal arts. And by studying liberal arts, it helps you to be more creative, think outside the box, etc., and more innovative. And it's no surprise that Steve Jobs, God bless him, used to always say that Apple lives at the intersection of technology and the liberal arts. And in my MBA programs and all the programs on my website, I teach you a lot of AI. Now, if you're interested in AI in finance as well, I'm working on another course I'm releasing soon to my clients on my website, which will help you analyze any company using artificial intelligence. Okay, and we do a deep dive and an advanced analysis on the 10K, the footnotes, etc. for companies. And what comes out of this is a one-page executive summary, like all my products, as well as a very detailed write-up as well. Okay, and you can bring this to your interviews to run circles around the competition. All right. All right. Next up, David from Canada, one of my students, my MBA program, wrote, "Good morning, Chris. Great to see you. What a great Blue Jays game last night. Probably the best game I've seen all year." All right. Next up, Aptiep. First time I see you on the call. Hope you join us again. who wrote, I finished O'Neill's How to Make Money in Stocks. What do you think about his CAN-SLIM strategy? Yeah. So I think you're talking about William O'Neill, who's the brilliant, late great billionaire who founded Investors Business Daily. Now, be really careful with IBD, meaning Investors Business Daily, that website. It works incredibly well in a bull market, okay? When the market is trading sideways or down, it doesn't work out well. Now, Investors Business Daily, they have something called the IBD 50, which is 50 smaller mid-cap growth stocks. And those are incredible companies to start doing due diligence on if you want to be a long-term investor. And I used to subscribe, I paid a couple $1,000s a month actually for his advanced charting and analytics program when I worked in the hedge fund industry. And the IBD 50 are great stocks to analyze if you do your research and you want to make a 5x5. What does that mean? Well, a 5x5 means a 500% return within 5 years. And the way to do that is you analyze those growth companies. Okay, you got to look at them closely. And then what you're going to do is using my 100-step investment research dashboard, you're going to answer 700 questions. Okay, qualitative research, quantitative financial research. And what comes out of this, like all my products, is a one-page executive summary, as well as a detailed report. Always do the research yourself. Don't rely on anybody. Don't rely on me or anybody on TV that speaks gooder than us to tell you what to buy or what not to buy. Otherwise, what happens is you make the cardinal sin of investing, which is this. You sell when the stock goes down. And Warren Buffett famously said, the New York Stock Exchange is the only store in the world where consumers sell stuff when it goes on sale. Be a long-term investor. I promise you it'll help you. All right. Next question. Naveed wrote, hey, Chris, I saw a market reaction, U.S. credit rating impact. What do you expect in the long run to the United States and global markets? No impact. So historically, whenever credit ratings have been downgraded for major first world economies, the market's always higher or almost always higher 1 year later. I have precedents in the past with the United States, okay, as well as with Canada and Japan as well. And, you know, so it's not AAA, it's AA. That's fine. Yeah, it's all relative. When you invest, everything is relative. And I really do believe the United States dollar is going to be the de facto reserve currency of the world for decades to come. If any country is going to dethrone the United States dollar in the very, very long run, it won't be China, my humble opinion. It'll be India. But that won't be for a long time. Yeah. Now, in terms of credit ratings, for those that don't understand it, I had to look this up. The way it works is it goes AAA. Okay, and there's major ratings agencies. There's S&P, Moody's, and Fitch. And they rate debt, meaning bonds. It goes AAA is the best, then AA, then triple B, double B, etc. Anything below triple B is called junk or high yield status is the politically correct term. And for those of you that want to learn more about that and mortgage-backed securities, etc., again, tomorrow morning at 9 a.m. Pacific time, I'm dropping my big short review on my YouTube channel. All right. Next question is, thanks to your education, I'm running alone a company across all country only with 4 Excel spreadsheets and AI. Congratulations. And my question is, what do you think about using Excel add-ins? Yeah. I'd be careful with that. Make sure it's by a reputable company because support gets pulled every now and then. Read the reviews. Make sure there's at least 1,000 reviews and 4 out of 5 stars, etc. Yeah. I'd be careful with that. Yeah. And obviously, there's a security risk as well. And what he's referring to is within Excel, you can actually have additional plugins to put anywhere up on the menu. Now, I teach Excel. I teach you how to use every feature in Excel in my programs. Okay, and I also teach you how to program in Excel from scratch. And Excel is the best way to learn how to code. And the reason I say that, if you want to code, is because what you can do is you can record screen movements, right? And those are called macros. So for example, you can record yourself going to a cell, inserting data, making it bold, underline, and a chart. Then you hit stop record, and then you see all of the code for you, which you can change. And the way I teach it is I teach it from an object-oriented perspective. Okay, and this is one of the many props from that Excel course, which my students get in my finance and MBA programs. All right. Next question is, what do you think about Ray Dalio So Ray Dalio, for those not familiar, he founded Bridgewater, one of the largest hedge funds in the world. I've had a lot of friends that have worked for him. Okay, it's based in Connecticut. And he wrote this book called Principles as well. That's not the one you're referring to, but it tells you greatest hits of how he manages his hedge fund. Now, I'm going to disclose what happens at Bridgewater, which I don't agree with. Okay, so every single meeting at Bridgewater, okay, for all the hedge fund employees, every meeting and every conversation is recorded everywhere except in the washrooms. And so people, you kind of live in fear when you think when you live in that type of environment, and turnover may or may not be around 40% because of that. I don't think it's a great way to manage people, but his returns are great. So you wrote, what do you think about Ray Dalio's books from the education perspective? I mean only Principles and the debt crisis cycles without changing world order and a new one. Yeah, I wouldn't listen. I respect him, I do. But I wouldn't listen to him on stuff he says about the economy. Okay, I think he's a great stock picker, but not an economist. Vice versa with George Soros, who wrote The Alchemy of Finance. George Soros is great on the economy and shorting currencies, but terrible with stocks. Yeah. So I take everything he says with a grain of salt. Yeah. And things are never as bad as we think. Similarly, things are never as good as we think. Yeah. And I learned that from one of the many hedge fund billionaires I've worked for over the years. And when you invest, you have to be incredibly unemotional. Okay? Don't get too happy when you make money. I don't mean to be a downer, but you probably understand, read between the lines why I'm saying that, because I don't want you to freak out when things don't go well. Stay unemotional about business and investing always, and think long term. All right, next question is, how do you think what is better, top-down investments or down-top? I think you mean bottoms-up, yeah. Michael Burry, who's played in this movie by, I think it's by Christian Bale, yeah. So Michael Burry, you're referring to, from Scion Capital, was right as a result of top-down, but Druckenmiller, Stan Druckenmiller, who used to work for George Soros at the Quantum Fund, Druckenmiller is a fan of bottoms-up. Yeah, it depends what kind of investment you're making. So George Soros and Michael Burry from Scion Capital, they're kind of high-level investors, right? Betting against major macro moves. Okay, now that's pretty rare. Most great hedge funds are bottoms up, meaning they pick stocks. So for me, the way that I pick stocks is I'm always bottoms up. And what you can do whenever you look to invest in stocks, before you invest or before you do your research, always ask yourself this one question. In 5 years, will this company and the sector it's in be more relevant or less relevant than it is today? Think about that. And the reason I say that is because that will stop you from getting seduced into buying stocks that are value traps, meaning cheap for a reason, like Yahoo years ago or Research in Motion. When this was first announced by Steve Jobs in January 2007, that was a death nail for Research in Motion. In fact, with technology companies, for the most part, okay, when a technology company starts becoming slightly less relevant, it's almost always game over. And turnarounds don't work in technology, except maybe one per decade or so, like IBM in the 90s, as well as Apple, of course, last decade or two decades ago. Yeah. All right. Prashant, hey Prashant, how are you? And I see you've been having some great conversations with Anthony, who works with me. Prashant wrote, are you planning to launch any course on single or multi-family office? Yes, in the finance vertical, which you can learn more about by going to the description of this webcast. Thanks. And I'm doing great. Thanks. Always good to hear from you. Thank you. Okay, moving on to Patrick, who wrote, once I saved up, I'm excited to join your program. I'm excited to have you join as well. There's a 30-day 100% money-back guarantee with everything we do. And the use of proceeds. So what I do, for the most part, I'm going to show you who I am. I want to die broke. What I do is I build schools. Okay, and I'll show you very quickly here. Okay, so if I go to the About section of my website, if it's going to work. All right, give me 1 second. So what I do is I build schools, and I want to build 1,000 schools in my lifetime. Okay, and so we finished Rwanda a couple of years ago. We're now doing Kenya, and here's the board right here. The Rwanda one, and I do it for my students, right? So if you're a student of mine, you don't have to be, but I build these in your remote villages or wherever it is. Okay. Now, in order for me to build 1,000 schools in my lifetime in Africa at $100,000 per school, including all expenses, that's $100 million. So that means I need to grow my business materially, make it happen, and I will make it happen as well. Here's Vital. His father tragically passed away during the genocide back in the early 90s. Here's some dude from the Department of Education when we cut the ribbon here, etc. I really do believe that every problem in the world is solved with education. In fact, it was Nelson Mandela, God bless him, who once said, education is the most powerful weapon that we can use to change the world. Now, I have to put this out there because I'm so transparent always. Okay, if I were a quota-carrying sales rep, I'd be fired. And the reason is because the glass is not half full or half empty with me. My cup overfloweth with optimism. Okay. And as James Cameron, the beloved Canadian director, producer, writer of Titanic, Avatar, once said, if you set your goals so high and you fail, you still fail above everyone else's expectations. And what drives me is trying to grow into the person I need to become to fulfill my goals. It's like the Rodin sculpture, I think, therefore I am. And so whenever I undertake a new initiative, like building schools in Africa or trying to change online education, I feel like I'm standing on the edge of a cliff. And I'm standing on the edge of a cliff, and I've got a bunch of airplane parts, okay? And I throw them off the cliff, and I jump, and I have to assemble that airplane before I land. 1,000 schools. All right. Next up, Nintendo. Good to see you. It's been years since I've seen you actually on the webcast here. It's so funny because the Switch 2 is coming out. And the way that I bought the Switch 1 when it was sold out was I did a search using the name you wrote there, Nintendo. But instead of D, I made it a T on eBay. Somebody spelt it wrong, and I was able to buy it for almost that cost. It works also with Wayne Gretzky rookie cards if you use an S instead of a Z, as we say in Canada for his name. I just gave away my secret for arbitrage. All right. Next up, Alfonso wrote, hey, Chris, hey. What are the critical next steps for forming and launch? How should the initial capital be allocated between legal setup, property acquisition, property development, and operation? Sounds like you're talking about a real estate company you're starting. So step one, what I would always do is write a business plan. I'll answer this generically to apply to everybody on this call. Don't ever, please start a company without writing a business plan, because failing a plan is planning to fail. And what you can do for a business plan is, I've actually got a template here for my clients as well. It's called the Venture Capital Bootcamp. So when you're writing a business plan, you want to, of course, discuss all the qualitative stuff like product, services, competition, go-to-market strategy, etc. But the most important thing you need to do is really focus on the financials. Okay, without data, you have an opinion, not a thesis. You really have to forecast the financials as well. And what comes out of this is a business plan and presentation slides. And one of the reasons you really have to focus on forecasting the financials is because you might be at a loss for the first 2 years or so. And that's okay. But you need to quantify the loss each year so that you can quantify the use of proceeds when you try to raise capital. Never use your own money to start a company. Never get a loan from a bank. Banks are chicken. Okay? If you don't pay back in time, they'll take everything. I want you to raise money from high net worth investors. Always. Because the sales cycle is quite short. And never talk to venture capital firms first. Talk to VC firms after you've raised some capital. And if you're interested in learning more about venture capital, I had the #1 venture capital professor on the planet, a good friend of mine, Ilya Strebulov from Stanford University. He teaches at the Graduate School of Business there. I had him on my webcast a couple months ago. And he wrote this great book, probably the best book in all of VC. I'm not paid to say this. He's a buddy of mine. Pick up this book. It's called The Venture Mindset. Yeah, really good. And I was actually, I guest lectured a lot in his classes over the years as well, and mentored tons of his students. And his course is the only venture capital course at Stanford Graduate School of Business. Good guy. All right, next question. Hey, Michael, how are you? Good to see you. Moving on to Stuart, who wrote, sort of aging the lines of the VU. What is the difference between index funds and ETFs? Yeah. So index funds are a subsidiary of ETFs, okay, for the most part. So let me show you here, and never buy mutual funds, okay? But if you want to invest in ETFs, I recommend going to etfdb.com. That's etfdatabase.com. It's a free website where you can do screeners, okay? So when people talk about index funds, quite often they're referring to things like the S&P 500. But there's tons of other types of ETFs as well. So you can have ETFs by geography if you want to invest in different economies. You can also look at ETFs by type if you want to invest in lithium ETFs, or if you want to invest in aerospace, tons of different ETFs, okay? And if you want me to go over the components of any of these 5,000 ETFs, let me know. I can do a deep dive in real time. Yeah. The first thing you always want to look at are the fees. Never invest in an ETF that has fees above 0.5%, okay? And then you want to look at liquidity. And you never want to invest in something illiquid, because illiquid stocks own you in a down market instead of vice versa. So never buy more than 10% of the average daily trading volume on a particular ETF, stock, asset class. Yeah. All right. Okay. So Javesh wrote, I meant dollar cost averaging. Yeah, I'm a big fan of dollar cost averaging. What that means basically is just keep buying more of the stock or asset class until it becomes a full position. Now, from a risk management perspective, I don't ever recommend having more than 5% of your portfolio in any one particular stock. I also don't recommend having more than 20% of your capital in one particular sector, like tech, retail, healthcare, industrials, cyclicals, whatever. Okay, you got to diversify. And if you live outside the United States, make sure you're cognizant that you don't have too much exposure to the US dollar. Yeah. And Warren Buffett also said that you need to save what is left. You need to spend what is left after saving instead of saving what is left after spending. And the best way to embrace this concept is as follows. Every 2 weeks when you get your paycheck, I want as much money taken out as possible and put directly into your investment account. That will make you cheap. It'll make you save for the future. Yeah. And let me show you the power of compound income. Okay. And what I'm about to show you will probably make many of you spend a lot less money. So I'm going to go to my complete real estate course here, and we're going to do a very, very quick analysis here. All right. Let's say you spend $2,500 every month on rent. Okay. And let's say that you do that over 50 years. So that equals 2,500 times 12 times 50 years right here. Okay. And let's say that you think the return on the real estate or whatever investment you're going to make is 15% per year. I know that's high. Now, $2,500 per month times 12 months or times 50 is 1.5 million. What do you think this amount is going to be worth at that return right there, which I know is high? Take a guess. What'd you guess? No, higher. Guess again. So the amount here, it's just math, is $345 million. I want you to be cheap. I want you to save as much money as you can. I want every dollar as possible taken out of your paycheck and put into investments. And I want you to invest in real estate. My dream is that within 10 to 15 years, all my clients, all my students, I have 2 million paying students around the world in every country. That was me showing off, sorry. Uncharacteristic of a Canadian. But my dream is in 10 to 15 years, I want all of my students to make more money from their real estate investment rentals than they do from their base salary. It's the best investment you'll ever make, I promise you, after education. All right, next question I've got here is Peter. Hey, Peter. Peter wrote, when Javesh mentioned a PMP certification, yeah, it's a certification in project management. That's right. Do you think this would be an advantage for him as a hedge against AI replacing him in the workforce? I do if his primary job right now is programming. He's a developer. Yeah. Because I really do believe that job function, meaning programming or developing, coding, is at risk to being replaced by AI, but not project management. Not yet. And I also don't think that sales positions are going to be outsourced or replaced by AI in the near future. People trust people. People don't trust AI. Yeah. Okay. Hey, Sean, how are you? Great to see you. Sean is one of my diamond clients. Great guy. Let me show you his LinkedIn profile, which I worked on with him. He's a great guy. If you guys want to understand anything about IoT, you can always ask Sean. Sean, here he is here. Yeah, he's a sleep expert as well. If anybody's having problems sleeping and wants to use an IoT device, go to his LinkedIn profile. He's great. Good to see he's also from Canada, like me. So Sean wrote, hey, Chris, given the massive energy demands of large-scale AI models, do you think environmental or infrastructure constraints could slow AI's progress? It definitely could. I think one of the biggest issues, though, is rare earth minerals. So the United States is trying desperately to get access to these rare minerals. Okay, rare earth minerals are called. And it's one of the reasons why they signed a big contract with Ukraine as well to be able to mine those products. And there's a massive constraint there because right now China controls the global economy when it comes to rare earth. And it's a strategic national defense issue for the United States. Now, when I was in Africa building my school in Rwanda and Kenya, there were so many Chinese companies there paving beautiful roads that go directly into the Congo in the middle there. And they take all of the natural resources out that they can. This is an issue for the United States, hence the trade war longer term. I can go into more detail if you'd like to. You wrote also on the flip side, how might investors or entrepreneurs position themselves to profit from the growing demand for compute and power? Yeah, what I recommend doing is I recommend doing a search for AI-based ETFs. Okay, then what I want you to do is I want you to look at what the components are of that AI ETF and see if you can invest in smaller semiconductor companies or providers of products for that sector. By smaller, of course, I don't mean AMD or NVIDIA. All right. Next question, Sean, who's in my MBA program. Hey, Sean, how are you? Went to Berkeley, just like my son, Andrew, who just got a job in investment banking. So Sean wrote, good morning, Professor. Great to see you. You wrote, loved your last Billions video on insider trading. Thank you. It didn't actually do that well compared to my other ones. And I think one of the reasons was because it was less than 10 minutes. Yeah. This one that's going to be published tomorrow, mañana, at 9 a.m. Pacific time. The Big Short, for those you watch or listening on Spotify. This one here is going to be 46 minutes. I go into a lot of detail. Yeah. And then you wrote, is it considered insider trading if you acquired the information outside the United States or using a brokerage firm based out of North Korea? Yeah. Insider information is insider information, period. And if you're doing something and you think it might be a gray line, then assume it is illegal. Just be really, really careful. And market manipulation is against the law too. I love the Reddit crowd. I really do. But I will say that if you go back to January 2021, GameStop, ticker GME, went up 29.4 times in that month, partially due to people on certain websites saying stuff about it. You can't manipulate stocks. There's so many things you can't do also that are against the law we don't know about. For example, you can't put in a massive buy order, right, at a certain limit price below market, and then cancel that buy order. If you put in that order so that the block trading systems see that order going in, a lot of people might buy the stock because of that. And if you cancel it, that's against the law. Yeah, you can't do that. You also can't get together with many people online and say, hey, let's push this stock up, against the law. Yeah. Okay. Next question is from Emulacra. Great to see you. Hope you join us again. Who wrote, love your courses. Thank you. Any advice on starting an investment partnership like that of Warren Buffett's partnership before he owned Berkshire? Yeah. So Berkshire, it was a cotton-based company that he invested in, and he loved the brand name and the company. He just named his old company that. Yeah. If you want to start an investment fund, there's a couple things you have to do. And I started a hedge fund and a venture capital firm before. You have to get a securities lawyer, okay, to discuss with FINRA, government agency, what certifications or exams you have to take. Then you have to get what's called an investment offering memorandum created, which is kind of like an S1 document. And in my MBA degree program, finance courses on my website, we do a big case study on Facebook's IPO. So your lawyer has to create an investment offering memorandum. Then you have to get what are called subscription documents set up. And subscription documents are 10 to 20 pages that your investors fill out to see if they're accredited investors, meaning do they have a certain liquid net worth? And then after 9/11, anti-money laundering laws new ones were created that are part of that as well. There's a lot of steps. Now, what I recommend doing, if you can raise at least 30 or 40 million, and I do have a lot of clients in my MBA degree program that have started finance companies done incredibly well. I recommend starting up what's called a master feeder structure. What that means is this. You have an offshore vehicle, in the Cayman Islands or British Virgin Islands where I set mine up, which is cheaper in Cayman. You have an offshore vehicle and you have an onshore vehicle in the United States, for example. And they both feed into your main LLC, your main company. Hence the term master feeder. And the reason you want to do offshore as well is because a lot of investors don't want to be subject to US taxes. So when I had my offshore fund, I had $5 or $6 million from one client in Europe, ABN AMRO. Didn't want to invest in the United States. They want to be subject to taxes. Never give your clients or your investors tax advice either. Yeah. All right, next question I've got here is Dewan. Hey, Dewan wrote, hey, Chris, what skills or mindset shifts should an accountant get if they want to make a shift into private equity or venture capital? Yeah. So the difference between accounting and finance is as follows. Accounting is more of a science. It's backwards looking, right? You have to try to make sure that all the financial statements, I use this in my programs, my courses, all the financial statements are perfected. Okay, it's more of a science. Now, finance is quite different. Finance is more of an art. You're forward looking. You're making forecasts, and you need to be comfortable with uncertainty. It's like being an artist, right? Draw outside the lines, etc. And if you can forecast a stock, a private equity investment, or whatever it is, to within 10 to 15% of the actual value, you're a billionaire. So you have to be comfortable with uncertainty. I can go into more detail on that if you want me to. Now, if you guys want to learn more about private equity, a great movie to watch is called Other People's Money with Danny DeVito. It's an oldie but a goodie. Yeah. And if you want to make a career change, and I'll answer this generically for everybody. If you join my program, what I do is I personally write your entire LinkedIn profile, and then I teach you how to network on steroids. Now, for anybody who wants to get a job in any industry, if you see a job opening online and you apply, you literally have a 1 in 250 chance of getting that job. Who gets that job? It's usually somebody that knows somebody at the company. So that's what I do. I help you with your LinkedIn profile, and I teach you how to aggressively network to get one-on-ones with people at companies you want to work at. And if you think this doesn't work, think again. Sorry. But let me give you a scenario. Okay. Let's say it's 20 years in the future, and you're 20 years more successful than you already are today. And somebody sends you a LinkedIn message that says exactly this. John, for example, hope all is well. I also went to the same high school as you, the same undergrad as you, and I'm from the same hometown as you. Please let me know if you have time for a coffee or a quick Zoom meeting. Thanks a lot, Jennifer. Would you take that meeting? You're darn tootin' you would. Of course you would. So we have to reach out to people that have something in common with us. And that's just one of many tips I provide you with when I help you to network on steroids in my MBA degree programs, business academies, and finance boot camps as well. Go to the description of this video, set up a call with us if you're interested. Thanks. All right. Yeah, and I don't recommend going into venture capital unless you've started a couple of companies. Please don't. And I can go into more detail on why if you want me to. The harsh reality is that the only VC firms that make money, or decent money, are the top 10 VC firms. The top 10 VC firms on the planet have 1% of their investments in unicorns, meaning billion-dollar valued companies. 1%. And Sequoia, which is so good, has 5% of their investments in unicorns. And I proudly served on the board of a company called Cohesity. We led the B round, and Sequoia led the A round. So I've had a lot of exposure to them. They're great. Now, for the most part, most people that work in the venture capital sector only get paid every decade or so, right? It's feast or famine, yeah. And you won't be able to, I'll go into detail why you shouldn't join a VC fund at first. Say you work really hard, you work at a venture capital firm, but you've never started a company. You work really, really hard. You make partner, but not general partner. You make partner, okay? And you want to compete with other venture capital firms to be able to invest in the next hot startup. Well, the founder CEO of that startup is going to select which fund to work with, VC firm. And they're not going to select you because you haven't started companies. Why? Because what happens is when a venture capital firm invests in a startup, they get a board seat. And the founder wants the person to be on the board that started companies before, that has made mistakes or been successful, etc. Yeah. All right, let me move on now to the next question. How do you think, is it possible to launch and run a multi-strategy hedge fund with not more than 5 professionals and several outsourced services? No, I don't think it's possible to be successful. The reason I say that is because you're talking multi-strategy. Most hedge funds are plain short, plain vanilla long short. Okay, when you're talking multi-strategy, you might be talking about event-driven, credit, etc. Right, and you need to be laser focused on one thing only and do it very, very well. Otherwise, you're a jack of all trades and a master of none. Yeah, and institutional investors won't want to invest. Yeah. All right, next up, Sean wrote, since you're a growth investor, I am, do you still allocate a portion of your portfolio for value stocks with good dividends, like Pfizer, as a form of diversification? I do. My wife has bought a bunch of healthcare stocks, partially because of COVID. We do have a lot of biotechs in our portfolio as well. They're smaller positions because biotechs are basically there's binary events. FDA approval, yes, stock goes up. If not, crashes. Yeah. Okay, next up, Manas from Calcutta. How are you? Wrote, good morning, my dear mentor, Chris, please. Hope all is well. Back again. A lot has happened since you popped in Serbia. Let's go. Yeah, bring on the questions, please. You wrote, imagine if you had $100 right now. Okay. All right, let me imagine that. Okay, this is fake money. I'm a fake teacher. Imagine you had $100 right now. How will you invest in real estate, crypto, stocks, bonds? Can you explain, please? Yeah, absolutely. All right, let's break this down. Okay, so I don't want more than 5% of your portfolio to be in cryptocurrencies. Okay, and I don't want more than 0.5% of your $100 portfolio, I mean 50 pennies, to be in any one particular crypto. And the reason I say that is because cryptocurrencies are dangerous. Okay. They're dangerous because they're not regulated really by the SEC. So when a stock goes public, like Meta did in 2012, by law, you have to have investment wankers and lawyers write an investment offering memorandum, right? And this protects you, the investor, and you have to read these things on sec.gov. With a cryptocurrency, there is none of that. I mean, there might be a 15-page white paper, which I can't really understand. But I've disclosed for many, many years what cryptos I own. Do your own research first, please. I own Bitcoin, Litecoin, Ethereum, and Ripple. And I do believe that at some point in my life, I don't know when, I don't know the path, but I know the destination, Bitcoin is going to be well over $1 million per coin. Do your research first. Bitcoin just hit an all-time high of $110,000, partially because of the new bill that Congress passed, but more importantly because Donald Trump, he has his own crypto. They just scheduled a massive meeting for investors. So basically, the government, Trump, is signaling that they're blessing cryptos. Yeah. Do your research. Okay, so we talked about 5% in cryptos. Let's talk about the other 95%. Okay. So I want to keep real estate separate, and I'll come back to that in a second. So the other 95%, well, I don't want you to have more than 5% of your liquid net worth in any one stock. Okay, and I want you to do a ton of investment research on the stock before you buy. And of course, you can do that using one of my many templates that I provide you with in my MBA degree program, of which you're a member. Now, I don't want more than 20%, as I mentioned earlier. I don't want more than 20% of capital to be allocated to any one particular sector, being tech, telecom, retail, industrials, healthcare, whatever. Okay, that's it. Now, what percent of your portfolio should be in riskier stocks versus less risky? Meaning growth versus value. Well, it all depends on your age. So the general rule is this. You take 100 minus your age. Now, you're pretty young. Let me just say you're 25 for fun. So 100 minus 25 is 75. So I want 75% of your portfolio to be in growth stocks and 25% in value stocks. Why? Because if you mess up with the growth stocks, you got many, many years left to make it back up. Conversely, if you're 90 years old, 100 minus 90 is 10. That means 90% of your portfolio should be in less risky value stocks or AAA rated bonds, and 15% in growth stocks. Now, let me come back to real estate. So real estate, I think, is separate from your portfolio, okay? Real estate, I want your biggest investment by far to be in your primary home or apartment. You get great tax breaks in the long run in many countries. And my grandfather, God bless him, who's up there with my sister, Katie, miss you. My grandfather used to always tell me, Chrissy, buy land, they're not making it anymore. Now, with any asset class, you always want to look at supply versus demand, okay? If you have a dearth or a limited supply on any asset class, it's a great investment longer term. Like gold, for example, right? They're not making gold. There's a limited supply of it. Bitcoin is great if this is true, because there's only going to be 21 million Bitcoins ever created by the year 2140, I believe it is. So make sure there's a limit of supply with any asset class that you invest in. Okay, next up, Ashley. Hey, Ashley. Hey, Chris. I've been a mental health counselor for 15 years. Is it too late to get into finance? Absolutely not. Absolutely not. Go to the link in the description of this video, set up a call with my team, and we'll talk to you about it, okay? Absolutely. You can do it. Anybody can change industries if you network aggressively. And my job, my humble job, serving all of you, okay? Imagine that, a teacher reviewing a student as a customer. My job is I'm your humble waiter. And this is where I proposed to my wife, Christine, 25 years ago. She said yes, in Paris. My job is this. When you go out to dinner, you look at the whole menu. You only choose one or two items. Similarly, my job is to expose you all to different types of careers in finance, consulting, every career sector there is, so that you can find what you're passionate about. I really do believe that if you do what you're passionate about, you'll be incredibly successful in the long run. Yeah. All right, next question is, what is the future of real estate when people will be leased in offices and workplaces and work from home or work from working spaces? So many malls here in India are going bankrupt left and right. Yeah. Well, I think one of the reasons a lot of malls are going bankrupt is because of, online services like Amazon. Yeah. I'm not a believer in commercial real estate, meaning real estate in big cities, I should say. Because what COVID taught us, for better or for worse, is we can all work and live remotely. We've witnessed the death of distance. So I'm a big fan of suburbs from an investment perspective and owning real estate investment rentals. Yeah. And when you look at a piece of real estate to buy for yourself or whatever it is, I always want you to look to see, number one, if you're allowed to use Airbnb there. And number two, is there's a secure door as well. So you can rent out the part of your house, which is covered by Airbnb. And that's exactly what we did actually with this room. Years ago, when I bought this house, that's how you say it in Canada. This room, we rented out to Airbnb, and it has a secure door. You can see the crown moldings up there as well. And the great thing about doing that is you get the appreciation on the house without the payments. What does that mean? Well, the monthly payments are covered. Your mortgage is covered by Airbnb, whoever you rent out to. Make sure you can do it, though, in the region you live in. Thanks. Okay. Next up, Vladika wrote, hey, Chris, which sectors are now undervalued? Yeah, I haven't done much work on this, but I would probably think any sector where people believe in the long run AI is going to destroy. Okay, that's what I would say. I would take a look at some clean tech companies. Yeah, you got to be a contrarian because the Trump administration is not as pro-environment as other administrations. I'm not going to get political here, but I think that will only last another 3.5 or so years. Yeah, so you can look for materially undervalued clean tech investments. Make sure, though, that they're cash flow positive, and make sure that these clean tech or solar-based companies, whoever it might be, don't just exist because of government subsidies, because that's a big risk. Yeah. All right. All right, give me 1 second. All right, next up, Sean. Hey, Sean wrote, hey, Chris, if there's anything I can do to help you reach your goal of building 1,000 schools, just let me know. God bless you, Sean. I appreciate it. God bless you. Thank you. Thank you. You have helped. Thank you. All right. And Sean, join me if you want. So I do. I don't know if I told you, Sean, but you're one of my legacy diamond customers. I just opened up my diamond program so that I do daily calls, daily small group Zoom calls, and you can join every single day. So join today at 10 a.m. Pacific time using the Zoom address. You know the Zoom address, and I'll explain to you more details. For it costs you nothing. Yeah, thanks. All right. Next up, Manas wrote, what do you think of UnitedHealth? Ticker down 57% year over year, also the biggest healthcare provider in the world. What is wrong, and is healthcare broken in America, as Trump said? Yeah, there's a lot of structural issues. I'm not an expert in that stock, but what I recommend that you do always, never listen to me on what stocks to buy, but I want you to use this template here. You're in my MBA program. Go to EMS4-2 to download it. That's Economics, Management, and Strategy, Semester 4, Class 2. Thanks. But I'm definitely a contrarian. I love to invest in companies that are broken stocks, but not broken companies. Broken stock means the stock feels like you're catching a falling knife, but the fundamentals are still good. And I'll give you a classic example. For me, so after 9/11, I worked at Goldman Sachs. It was awful. I remember getting back to work. The markets were closed for like 5 or 6 days or something. Getting back to work, and I looked at stocks that were materially on sale. And back then, it was, I think, late September 2021. I saw that Take-Two, the parent company of Grand Theft Auto, the stock was down materially. And the reason it was down was because they released GTA 3, I believe it was, and it was based in Liberty City, which means New York City. And in the background, they had the Twin Towers. And so what happened was Take-Two had to pull the product from shelves, re-engineer it to take out the Twin Towers. The stock was getting crushed because of it. And so I backed up the truck and bought them. You got to be a contrarian like that. Buy broken stocks, but not broken companies. Yeah. I'm currently watching a great documentary on Netflix now on Osama bin Laden and how they caught that bastard. All right. All right. Next up, Manas wrote, Buffett has retired, will be but man, he's a legend. What is the last annual meeting he had? What do you think of Berkshire and the cash pile they have? What are they looking at? As he said, he will hold Japan forever. Yeah, the reason he's looking at Japan closely is because Japan is value territory, right? So a lot of institutional investors have been investing in China over the past couple of decades, and less so Japan. Japan's economy and the Nikkei sort of peaked around 1990, although it revisited that recently. Now, one of the structural issues with Japan, and this is terrifying, and I used to do a lot of banking work in Japan as well when I worked at Goldman. One of the problems is this. Japan right now has about 130 million people. It's going to have 80 million people in a couple decades. It's in decline. People are not having kids. It's tragic. It's tragic. So a lot of negative news is already priced into the Japanese markets. Do your research first, obviously, before investing. Yeah. But United States and Japan are forever going to be great friends. Yeah. So I do believe in the economy longer term. Yeah, I watched that same annual meeting that you did, and he had very nice things to say for Tim Cook, who was there as well. I'm not a fan of investing in any company when the founder CEO leaves. It's just the way I am. So I don't care who his number 2 is. I don't care. There's only one Warren Buffett. Yeah, and the genius of Warren Buffett also is not just his stock acumen, but more importantly, his ability to communicate. He makes very complicated topics simple to understand. And he's a great presenter. Yeah, and I teach you how to present as well in my MBA degree program and in my finance program as well, where I help you with finance interviews. Next question is, Amin wrote, do you think it's possible to make a consistent return with day trading over a long period of time? No, not at all. The reason I say that is because day trading, like, you have no idea what economic data points are going to be released. I don't know what Trump is going to say today or tomorrow. I don't know what Xi Jinping is going to say. I have no idea what Besant's going to say or Powell. No clue. You got to be long-term focused. Otherwise, you're fooled by randomness. Now, each month has 20 weekdays, meaning 20 days the major equity markets are open. We can't possibly make money every single month or every week. It's impossible. You always have to be longer term focused. Always, always, always. Yeah. And I say with love my heart. Yeah. And if you want, go to my YouTube channel, do a search for day trading. I created a very, very long video on why I'm adamantly against day trading. And some of the viewers weren't happy I wrote that, but I say with love my heart because I care. Yeah. And day trading it's like going to a casino. The worst thing that can possibly happen to you is you go to a casino, right? The first time you go to a casino, you go there and you make one bet, right? And you win. And you think it's repeatable. It's not. Similarly, the worst thing that can happen with day trading is the first trade you make money. The system is rigged against you statistically. It doesn't work. How do I know? Because I can't name a single day trader that's been successful in the long run. They do not exist. And if anybody tells you otherwise, they're scamming you. I promise. Yeah. There's a reason why Buffett is successful. He's very long-term focused. In fact, when he bought Coca-Cola around 1990, which he still owns today, he told himself, I'm buying this stock. I just bought it. And I'm assuming the market's going to be closed for 10 years. Obviously, he knows the market won't be closed for 10 years, but that's how long-term focused you got to be. We've all panicked in the past, myself included, to be intellectually honest. We've all panicked because the stock we own went down, and today it's up here. Just be long-term focused and be diversified. It will serve you well, I promise you. If you don't have time to do investment research, just buy ETFs. Yeah, for example, ticker VOO, after you do your research, of course. Yeah. Okay. Next up, Anything wrote, hey, Chris, what skills are most required to get hired into one of the highest paying jobs? Yeah. So a lot of it, so the higher paying jobs are usually in the finance industry. Okay. If you're working for a startup and you want to make money, if it goes public, for every Google that goes public, there's a gazillion startups that go nowhere. So the best way to make money fast, okay, in a short amount of time, is by working in the finance industry. And I have a finance bootcamp product where I teach you how to interview, how to network, and how to get a finance job. And this is also includes a 150-page exercise book. And if you're interested in working in investment banking, hedge funds, private equity, venture capital, etc., go to the link in the description and set up a meeting with somebody on my team to discuss if it makes sense for you. And you don't have to know anything about finance or accounting. I teach you everything from scratch. All right, next up, Vincenzo wrote, I'm studying economics and finance in university, and I'm hoping to get into the world of finance, but my average grades are not the best, 3.3 GPA. So I still have a chance of getting that dream job. Absolutely. I had a 3.01 cumulative GPA in my undergraduate studies at McGill University. I network like crazy to be able to get that job at Goldman Sachs. You can do it as well. And I will help you do it. Yeah. Okay. Next question is, where is Europe going? I mean, they're stagnant more or less and super dependent on China and Russia for energy. Why and where is it going in 10 years? I don't know. I really don't. I do think that this cray-cray war between Russia and Ukraine will be resolved within the next year or two before the Trump administration is done. Yeah, I'm not a top-down guy. I'm more bottoms-up. Yeah, and Europe has plenty of wonderful companies that you can invest in after you do your research. Yeah. Okay, next question is, what are the main ideas or factors to think about when starting a business? Yeah, so whenever you start a business, I want you to write a very comprehensive business plan. Okay, and I have a spreadsheet for this in my products. Okay, so I want you to focus on the management team first. Right? Make sure you have an incredible management team because investors look first and foremost at your management team. In fact, sophisticated investors would rather invest in a management team with a B business model instead of investing in a B management team with an A business model. Then there's many other factors as well as I highlight here. Once you complete this entire spreadsheet, answer tons of questions, I have your business plan created for you and your investor slides. Yeah. Okay. All right. Fat Bastard wrote, what are thoughts on the tax bill? What movie is this from? Give me my baby back, baby back, baby back. The name of the character in that movie is Fat Bastard. Very famous Canadian. Proudly Canadian. Yeah. Thoughts on the tax bill? I haven't looked into it too much. I'm more of a libertarian. I'm a believer in very, very low taxes. So if there's material tax cuts, again, I haven't looked into it, then I'm a big fan. All right, next up, in your opinion, which place gives the most annual interest for your savings account? Yeah, it depends what country you're in, right? So countries with very high interest rates obviously have the best returns. But the problem with that is you have to be cognizant of foreign exchange swings. And what you can do is, if you're in the United States, you can always invest in savings bonds. And I can go into a lot more detail on that. Actually, I'll do that really quickly here. I recommend looking into this. So you go to treasurydirect.gov. The reason it's called treasurydirect.gov is big banks are not allowed to sell this product I'm about to show you. You have to go directly to the United States Treasury. Okay. So what you can do here is you can buy Series I savings bonds. Okay. And what happens with these bonds, I own these. Okay. Do your research first. What happens with these bonds is you'll never lose money, even if there's deflation. Okay. And this is kind of like a loan to the United States government. And the way it works is every 6 months, the interest rate resets based on what interest rates are now and what inflation is. So May 1st, it resets. And then October 31st, it will reset. And I bought these a couple of years ago. I remember telling my students on this weekly webcast, it was close to 10%. Yeah. And you got to own it for at least a couple of years or you will pay fees. I think you can only do it if you're in the United States. I think the minimum amount is, it's up to $10,000 you can buy now. Yeah. Talk to your accountant first to make sure you put it in the right retirement savings account if you can. Yeah. Okay. Yulia wrote, oh, you're talking to somebody else there. Okay. Next question is, what are the skills you or anyone else has used to learn efficiently and effectively? Yeah. Yeah, I find that stay away from learning theory. Learn practical stuff, people that have done it. And that's the basis for everything I do. Everything I teach you is practical, not theoretical. But the most important thing I think you can do is find multiple mentors, meaning Yodas, right? Usually somebody older than you that has a lot of experience in a particular industry. And sit down with them every now and then and just ask them for advice. If you work in a company right now, I want you to find Yodas in multiple departments. How do you do that? Well, you can do an advanced search in LinkedIn and find people in your company or mentors outside your company that have something in common with you. A couple things, maybe the same high school, university, hometown, etc. Sit down with them every now and then, and they'll be happy to mentor you. And you'll be amazed. Most people say yes to this, right? It's a big compliment for them. And from their perspective, they think, when one teaches, two learn. They're essentially mentoring themselves. And make sure you mentor other people in your company or a younger cousin, whatever it is. Because what it does, it reinforces your core DNA subfabric of what success is in your eyes. Okay. Okay, next question is private equity dead or old school? Not a lot of deals have taken place. Also, if you were to have a hedge fund now, what type of fund would it be and why? Probably long short. But it'd be fundamental focus, long-term focus. Now, the most successful hedge funds have 3 to 5 year outlooks. They don't necessarily own stocks for that long, but they're that long-term focused because the harsh reality is with hedge funds and any investment portfolio, the bulk of the performance in that fund or portfolio every year comes down to 2 or 3 stocks or investments that you've done a ton of research on that you're very, very long-term focused on. Yeah. And I think you had another question there as well. Give me one second, please. Yeah, is private equity dead? No, not at all. Yeah, a lot of deals aren't going through right now because there's a lot of uncertainty about the global economy given the tariffs. But it's certainly not dead. And for those of you not familiar with private equity, it means pools of capital investing in public or private companies. They buy a company, fix it, make it better, sell it back for a return. And if you want to read a great book on that, you can read a book called Barbarians at the Gate, which was written back in the late 80s in the first private equity boom, where Henry Kravis from KKR, and I've met him before, he was a graduate of the same university as me, he talks about his investment in the National Biscuit Company, Nabisco. Okay. Next question is long-term investing still valid in a world of short-term volatility and high-frequency trading? It absolutely is. More so now than ever. There's so much volatility in the market, so much noise. Please don't watch Bloomberg, that's right, or CNBC or Jim Cramer or anybody else that's going to walk you off a cliff. I want you to be long-term focused, long-term focused. Ignore the volatility, always, please. Don't panic, be long-term focused. When you invest, I want you to tell yourself, I don't care what the stock does in the near term. I just care what the stock's going to be worth in 20 years. I know the harsh reality is we all need money within a couple of years to make payments on whatever it is. But the longer the view, the wiser the intention. And that is Buffett's genius. Yeah. Okay. Next question is, are markets more driven by fundamentals or liquidity? Yeah. I would say in the long run, fundamentals. Okay. Now, given the material rise in ETFs since 2004, right, correlation's quite high between markets and different sectors and a lot of funds as well. But just think long term and do fundamental research and it will serve you well. And so when I advise my clients, and a lot of my students bring what I'm about to show you to interviews and it helps them get the job. Okay. So when you create, and this is dummy data, a one-page report, you focus on fundamentals first, valuation second, and technicals a distant third. And you can even hide this if you want to. And what I recommend that you do is at the bottom here, you have your name. So what you do is you print this out, give it a second here. You print this out and then you put it on the back of your resume. Or what you do is you email or LinkedIn attach this to the people that you've met with or will be meeting with, etc. Send them a new idea every week or two. I can help you with it as well in my program. It works incredibly well, I promise you. Now, when it comes to liquidity, I don't want anybody to invest in a stock ever that is illiquid, meaning it doesn't trade very much. In fact, never invest more than 10% of the average daily liquidity in a particular stock or security. Otherwise, you won't be able to sell it if the market crashes. Next question is, Jamie Dimon said, stop hiring young people and said, use AI. Will you agree or not? Also, do you think anything boring and repetitive like programmer editing or writing or vice versa? Yeah, I really do think anything repetitive, any manual kind of data entry job, for example, will be replaced with AI. I use AI a lot in my company instead of hiring a lot of people, although I do have a lot of staff. I am hiring a lot right now. And I'm sure many of you saw that Jamie Dimon is stepping down. He's probably one of the most successful CEOs in history in the financial services sector. He's not always right, though. You know, he's been very wrong about Bitcoin as well. Yeah. But I do believe that AI will replace a lot of our jobs. We have to try to disrupt ourselves before the marketplace does. I know it sounds out there. It's a different way of thinking. But if you think about it, if you're forward thinking like Reid Hastings, who's the brilliant founder and former CEO of Netflix, he tried to disrupt his own business model. Remember, many years ago, Netflix was a DVD rental service. In the mail, you get DVDs. And then he disrupted his business model by doing streaming. You got to be long-term focused like that. Disrupt your own business model and yourself before the marketplace does. Yeah. And I teach you in my programs how to use tons of AI products to work smarter, not harder. Yeah. Next up, Jimmy wrote, hey, Chris, when will the next Venture Capital Bootcamp likely come up? I'm already a MBA student. Yeah. You can access it right now. Just go to E31 in your curriculum. That means Entrepreneurship Semester 3, class number 1. Yeah. And today, during our 3-hour and 20-minute Zoom call, starting in 45 minutes, I'm happy to show you in more detail. Yeah. And for my students in my MBA program, the new programs, Accelerator, Executive, and Diamond, I do 7 hours of weekly calls. That's a call every single day. Yeah. Okay. Next question is, what is the future of Tesla now that Elon will be gone in a decade? Is Tesla just another EV without Elon? And yeah. So whenever a founder leaves a company, okay, and he's sort of a founder of Tesla. I know it's debatable. I think he's sort of a founder. But whenever a founder leaves a company, investors should run for the exits. And people did this with Elon twice in the past couple of years. So when he became immersed in focusing on Twitter, Tesla stock got crushed, innovation died, execution died temporarily. Then he came back, stock did better. history repeats itself. He did the same thing, starting last summer with the Trump administration, helping the Trump administration win the swing state of Pennsylvania. Then he became involved with Doge. As a result, Tesla execution died, innovation died, and the board actually even had discussions about potentially replacing him. Now he's back focused on Tesla. So I would probably bet on Elon after you do your research, of course. Yeah. But whenever a founder leaves a company, I run for the exits. Yeah. And if you want more details on that, just do a search for an article I wrote when I worked in the venture capital industry it was venturebeat.com. Just search for VentureBeat Chris Haroun, and you'll see an article on that. Yeah. Okay. Next up, thank you for the love. Anything wrote, I've had the opportunity to study your courses, and I truly appreciate the clarity and value they provide. Thank you for your excellent work. Thank you. When one teaches, two learn. Thank you. I'm so happy I retired from Wall Street like a decade ago. I was born to do this. This is what I love doing. I love helping people. Yeah. Next up, Yulia wrote, okay, that was a comment Tim asked. When you guys talk to each other, and I encourage it, always do the @ sign before the name. And by the way, we just signed a massive contract with a company called Circle. And what this is going to do is this is going to provide a great way for all of you, meaning all of my thousands and thousands of MBA students on my platform, to be able to interact with each other. And we're going to be releasing the first beta of this later this month. For those of you in my online programs, we are going to replace Discord with this. This is much better. This is founded by former employees at Teachable, which is a very poorly run company that I use right now. Yeah. Okay. Next question is, you said Russia owns 50% of rare assets. I didn't say that. Of Ukraine now. And they want those 4 regions. U.S. will have half the rare earth and Russia the rest, but China has the best equipment to plow it out. Yeah, China definitely has the largest market share globally of rare earth. And these are minerals that go into creating AI stuff, et cetera. It's very strategic, yeah. And I think the United States getting involved in Ukraine is brilliant because, number one, they get access to rare earth. And number two, by the United States being there, it kind of, from a chess perspective, game theory perspective, keeps Russia in check. Yeah. And I believe one of the biggest mistakes was the United States pulling out of Afghanistan. I do. And the reason I say that is because if you have troops in Afghanistan, you kind of keep Soviet Union, I say Russia, sorry, in check. And I think if the United States had left their troops in Afghanistan, I don't think there would have been a significant invasion of Ukraine. Yeah. I don't want to get too political, though. Okay. Manos wrote, I had a 3.8 GPA in undergrad. Doesn't mean I'm smart. I'm a nerd. No, you're very smart. Yeah. Much better than I had. Yeah. And for those of you that screwed up a year or two university, don't worry. You can redeem yourself. I got close to a 4.0 my last 2 years. My first semester was a disaster. Yeah, I don't want to go there, but I have no regrets. I did this. I don't drink anymore, but I don't drink any less. Okay. All right. I'm going to take a very, very quick break. I'm going to show you a quick video here that I made. I rented actually a couple of Hollywood studios, including the studio where American Sniper was made, as well as a lot of Clint Eastwood movies. It's for one of my courses. I'll be right back. Enjoy. Thank you. I don't know how to say it, so I'm just going to say it. I'm teaching a comprehensive course on Microsoft Excel. But let me tell you, Excel is a magician's hat that pulls out solutions to problems you never thought possible. As a former beta tester wizard for Microsoft, I've created more spreadsheets than stars in the sky. Come with me on a journey that will blow your mind. We're going back to a time when accounting was done with, well, sand. This is 5,000 years ago when the ancient Mesopotamians ruled the world, and clay tablets were the ultimate tech. They invented writing and spreadsheets before spreadsheets even existed, with wedge-shaped writing called cuneiform pressed into clay tablets. They tracked their trades, taxes, and loans like it was nobody's business. Ah! I think I'll add new shoes to the miscellaneous expenses column. And then came the paper ledger, the smartphone of the Middle Ages. The first tech revolution that changed the game for accountants and merchants everywhere. It allowed them to record several hundred financial transactions per day, a step up from clay tablets. And just when it seemed like spreadsheets had hit their limits, a new technology emerged. Computers with raw power at your fingertips. Programs like VisiCalc and Lotus 123 allowed for thousands of calculations per day. But with great power comes great responsibility. The undo function was yet to be invented. And today, Excel can do billions of calculations per day. So next time you open up the app, remember the journey it took to get here. And who knows where we'll go from here. Join me and unlock your full potential to wield thousands of years of history like a true wizard. Thank you for letting me take a quick break there. Next question I've got is from Kostav. Who wrote, I would like to move into investment banking or hedge fund in the near future. I'm 22 years old now. Is it possible? Absolutely. It's going to come with networking a lot. Now, one of the issues with investment banking is quite often it's hard to get into investment banking unless you're a student at a target school, meaning a top school. What you can also do to get in, though, is you can network like crazy. I've had many students in my programs over the years that have gotten jobs in investment banking by networking, including Vincenzo, who halfway through my MBA program actually got a job. I helped him to do it at Goldman Sachs in investment banking at the associate level, where Harvard Business School students start. 2/3 of HBS is BS. Is that Haroun Business School or at Harvard? I don't know. But a lot of it comes down to networking. Yeah. And your network is your net worth. If you want, you can check out my program. Go to the link in the description, set up a call with one of my staff. We're growing quite a bit, and they'll be able to help you out to see if my program makes sense for you. Yeah. Okay. All right. Next question is, what do you think of the ultra short income ETF like JPST? I'm against doing any of those levered funds or ETFs, and the reason is because quite often there's a lot of options involved, and you can lose a lot of money. Yeah, if the fund's not properly managed. Now, if you want to invest, I recommend going to that ETF's website and reading the investment prospectus for that fund. Vanguard does this, Fidelity, Schwab, tons of them do. Just read up on it first and thoroughly understand what the option strategy is within that broader fund. Okay, and I want you to look, if there's dividends, I want you to look at the average dividend quarterly over the past X number of years. Really understand what you're getting yourself into. Yeah. Now, usually I say no more than 5% in any one particular investment. If you're going to do an ultra short, I'd probably cut it in half, like 2.5% size max. Yeah. Okay. And I don't care if a company that you want to invest in has a cure for cancer. It's got to be, I mean, it'd be a great thing. I don't want you to ever have more than 5% of your portfolio in any one stock. Okay. It's just good risk management, good portfolio diversification. Okay. Next question is, what do you think of the future of the gambling industry from a market perspective? Yeah. So I ethically, I don't invest in gambling stocks, marijuana stocks, alcohol stocks, or any stocks that hurt the body. The body is a temple. But if I'm unemotional, I'm very bullish on the gambling sector longer term. very bullish because we're starting to see a lot of deregulation, which is huge for the gambling sector as well. Yeah. But just don't make any position more than 5%. Okay. All right. Next question is Love from Poland. Thank you. I hope somebody makes a movie on Lech Walesa, who was one of the people, along with the Pope in the 80s and Ronald Reagan, that brought down communism, which I loathe. You wrote, did you by chance read The Startup of You by Reid Hoffman? I did. And so Reid Hoffman is the co-founder of LinkedIn. He's now a venture capitalist at Greylock Partners, great venture capital firm here in the Bay Area. Let me summarize The Startup of You. And I think everybody should read it or listen to it on Audible. The Startup of You basically says your network is your net worth, and you should create a bank account and put money in that bank account. And the sole purpose of that bank account is for you to travel to meet with people. For example, when I used to live in Toronto, and you'll know a Canadian because Canadians say Toronto, Americans say Toronto. But when I used to live in Toronto, I used to go to New York every now and then for day trips, okay, or one-night trips. And the sole purpose was to meet with tons of people that work at different hedge funds, investment banks, etc. I would do 8 meetings in a row during a given day. Travel was a pain in the neck, especially in Midtown. And what I would do is I would stay at the YMCA in Midtown, which was $72 per night. You had to share bathrooms and everything, all that stuff. But that really, really helped me from a networking perspective to be able to break into the finance industry. Yeah. Great book. Okay. And I think he wrote another one recently called Blitzkrieg, which has to do with startups. Yeah. Next question I've got, Strength for Service, SFS, wrote another question. Sure. I'm a sector head at a student-run investment fund for my university. What advice would you have to groups like this? Yeah, your network is net worth. Relationships are more important than product knowledge. What I would do is do an advanced search on LinkedIn and find prominent alumni from your university that work at top funds or finance jobs and have them come in person to present or do a Zoom presentation. They all want to help you. You just have to ask. And then after they do it, I want you to ask them for a job. Yeah. And if you want me to do it, I'll do it as well. I can do it remotely over Zoom, present to everybody in your club, just to humbly help. Asking you'll receive. It's prophetic. It's been true since the beginning of time. Closed mouths don't get fed. Okay. That reminds me, my teacher used to say, mouth closed, ears open. Yeah. Okay. Next question is, what is the future of TikTok? Will Oracle, Tesla, or Microsoft buy them? Tesla, I don't think so. Some people are speculating that only because Elon Musk is pretty close to Donald Trump. I think Oracle is probably the closest to want to buy it, only because Larry Ellison, the brilliant founder of Oracle, said multiple times he wants to buy the company. I think it will get sorted out. I think they were very close to a deal. Very close. According to people familiar with the matter, they were very close to a deal. And then the second that Trump mentioned all the tariffs on China, China said, no, we're not going to do a deal right now. But I think a deal is coming. I hope so, because I definitely enjoy TikTok. Yeah. All right. But I do see a lot of, like, it is kind of scary, the political influence that TikTok can have. It's actually frightening. Yeah. But I've noticed that that there's fewer racist remarks being made on TikTok now than, say, 6 or 7 months ago, which is a good thing. Yeah, it was really getting out of hand. It was ridiculous. Yeah, propaganda crap. All right, moving on. Javesh wrote, I've come to realize I'm not as sharp as I thought. No, that's not true. What steps can I take to improve my thinking, learn faster, and become generally smarter? Yeah, no, it's all up here. Okay, it's like the Rodin sculpture, I think, therefore I am. Okay? What we think, we become. Whether or not you think you can do it, you're right. We have to, and I say this with love in my heart, okay, and I'm being self-critical of myself in hindsight too. We have to stop this fucking imposter syndrome that many of us have. Okay? And I'd say it because I care. Why do we do this to ourselves? Why do we kill our own confidence by thinking less of ourselves? You know, I'm a very religious man, you know, and I ask you, do you believe in God? Yes. Does God believe in you? Yes. Well, if you don't believe in yourself, you might be questioning your faith. We don't want to do that. Nobody is smarter than you. And that's why I licensed that Steve Jobs video that I end every single webcast of mine. Everything in this world was created by people that are no smarter than you. That's what he said. We have to stop this self-sabotage. Okay? Confidence leads to perceived competence. I recently presented to one of my corporate clients, a massive semiconductor company. I presented to all employees, and it was on how to sell and how to present. And the CEO of the company said during the presentation, quite often, we decide which vendor to buy from based on how confident they are while they present. It's amazing, isn't it? Confidence leads to perceived competence. So how can you boost your confidence right now? Well, we're going to do an exercise together. I want everybody to get a piece of paper, please. Okay, and a pen or a pencil. And if you meet me in real life, I'm a tiny man. And by the way, this September, there's a 3-day event here in Napa Valley in San Francisco Bay Area that anybody in my MBA program can attend. Set up a call with us to learn more. Okay. Now, here's the exercise. I want you all to write this down. Okay, and this is life-changing. I want you to write on a piece of paper, I don't care what people think of X. And fill in the blank for X. And I want you to do that 20 times. That's right. I don't care what people think of, of my looks, and my nose, which is ginormous. So ginormous, I run out of this damn makeup stuff to get the lights to stop reflecting on my face after one use. Maybe I'm beautiful, maybe it's Maybelline. Tell me somebody understood that joke. I don't care if people find out I'm wearing cargo pants right here, which I love. $20 from Amazon. There's 8 million pockets. It's the best. I don't care if people judge me because I don't work in venture capital. I'm a teacher. I don't care. I don't care what people think of me. 20 times. I don't fucking care. And I'm sorry to swear, but I say it with love in my heart because I care. I think, therefore I am. Okay? I don't care. I don't care when I go to parties now here in Hillsborough, where I live, California, that people don't talk to me as much because I'm not a venture capitalist anymore. They say those who can't do teach, and those who can't teach gym class. And you know that's true, right? Those who can't teach gym class. And I suck at sports, so you're all out of luck. I'm kidding about teachers. I love teachers. I don't care. I don't care what people think of the fact that I'm a 53-year-old man-child and I still play video games. And when GTA 6 comes out before I die in May of next year, I'm taking a month off. You're not going to see me for a month. Don't buy my products because that month I'm not going to be supporting you guys. I don't care. I don't care what people think of the fact that I teach with case studies from companies people think are made for children. I don't care. I don't care. I want you to write that down 20 times. I don't care about X. Okay? And I promise you, the subtle art of not giving a fuck what people think of you will serve you well. Okay? And I say all this with love in my heart. And again, I try not to swear often, but I do it for effect every now and then. So here's the most important chart you'll ever see in your life. And this is on the back of one of my case studies on the Trader's 8. Here's your age. Here's give a fuck. Okay? Now, when you're down here, when you're kids, like my children were, you don't care what people think of you. When you're up here and you're old, like me, young at heart, you don't care what people think of you. The problem is when you're teenagers or 20s, 30s, 40s, 50s, whatever it is, you're up here. You care what people think. Stop doing that to yourself. Stop the self-sabotage. This triangle of despair we need to avoid at all costs. I want you to live at this level. This is what the best entrepreneurs live at, this level. Oprah Winfrey, Elon Musk, that's right. Bill Gates, Steve Jobs, etc. They don't care. Certain politicians don't care as well. They don't care what people think. You live at this level, I promise you, you're going to be happier and way more successful in the long run. And you'll stop creating this mental fuck up of telling yourself say with love my heart, telling yourself that I'm not smart. Don't be your own biggest judge. Don't be your own enemy. From now on, I want you to put your shoulders back, as Tony Robbins says, and pretend you have a cape behind you. You're the most powerful person in the world. And then, only then, can you really live your life to its full potential. It's like asking somebody out on a date, right? If you tell yourself I'm not good enough, right, and you're kind of shy or whatever it is, reserved like I used to be, she's not going to say yes. Confidence leads to perceived competence. Remember that time you asked somebody out and, you thought they were out of your league, but you didn't give a damn. You're confident. You didn't care. And it worked. I want you to be like that. I'm not saying be rude or disingenuous or swear like I did, and I apologize earmuffs for anybody out there that doesn't like swearing. I do it for a fact because I love you guys. I want you to be you. I want you to be yourself. I want every meeting you go to and every presentation you give to tell yourself, I don't care what people think. I'm just going to be me. Okay, Senator of the Board, thank you so much for that $20 donation that will go to building the schools that we're making. Thank you. Thank you. And then you wrote, do you have a course on bond investing? What is your position on forward contracts? Yeah, I talk about that in my programs. I talk about all derivative instruments. I talk about bonds as well in my MBA and finance programs you can find on my website. Now, if you want to learn quickly about bonds, I love edutainment. So I'm going to show you the best way to learn about bonds really quickly here. Okay, so go to my YouTube channel. Okay, and then on my YouTube channel, just search for bonds. Okay, and then I want you to watch, let's see here, Bond Investing Explained right here. Okay, Bond Investing Explained. It's 36 minutes. I explain bonds from scratch. Yeah, I had a lot of fun doing that as well. Okay. All right, give me 1 second here. And if I can't answer all the questions, those of you that are in my MBA programs, I'll see you at 10 a.m., meaning in 20 minutes or so, for our weekly 3-hour Zoom call. Yeah. Okay. And I want to ask you guys as well, when it comes to confidence, what do you do? Please type in the chat here. What do you do to become more confident? What do you do? A lot of it is subjective, what you tell yourself, like this prop here, the Rodin sculpture, I think, therefore I am. But I want to learn from all of you. What do you do? Another thing I do is I like to exercise. I've had depression issues in my life. I'm not ashamed to say it. And the way that I deal with my depression and my confidence issues is, and this is cray-cray, but I don't care. What I do is I get, 20 to 30,000 steps a day. Here's my messy desk. I don't care. But I get tons of steps here done in my office. Okay. And this helps me from a biohacking perspective to be more confident and happier as well. You never go to the gym and afterwards tell yourself, I wish I didn't work out today. Said nobody ever. I want you to exercise a lot. A lot, every day. You do have time to exercise, okay? You do have time. And if you think you don't, in my program, in the first lecture, it's an orientation session where I have you complete this printout every day. And this printout here, it's basically what you're going to accomplish tomorrow, and then you score yourself. You don't share this with me or anybody, okay? And if you want to get something done, give it to a busy person. We all have time to exercise every day. I promise you. It's just you need better time management. And if you exercise a lot as well, you'll think more clearly, you'll be more confident, etc. And this biohack I have right here of exercising while I work, right? Getting my 20 or 30,000 steps in a day. I came up with this years ago. When I was a student, the first hour of studying in the morning, like I have more energy already, eh? The first hour of studying in the morning was the most productive. And when I crammed for 10 hours at night, it was less productive than that 1 hour in the day, in the morning. So what I do is I trick my brain from a biohacking perspective. I trick my brain into thinking I just woke up all day long. How? by exercising. If you treat this right, this works gooder. I promise you this works. And I teach a lot about biohacking as well in my programs. Of course, talk to your doctor first. Okay. Where was I? And Javesh, I love you, man. I love you. Javesh, send me an email to support@harounventures.com. I want to give you my program for free. And I want to personally mentor you. Okay? So just email support@harounventures.com. Thank you. Yeah. All right, next up, Jerry wrote, hey, Chris, please speak more about derivatives in hedge fund application. Yeah, absolutely. Yeah. So let me explain what derivatives are first from a high-level perspective. So the derivative umbrellas includes, remember calculus class, which means the rate of change derivatives. Derivative umbrellas includes options, swaps, futures, forwards, that sort of thing. And what derivative products do is they're supposed to be an insurance product or a way to make money. So the best way I can explain it is as follows, right? And I have tons and tons of stuff to teach you all this stuff in my MBA program. Derivatives are like life insurance. So let me explain that. So every month I pay this much money, okay? Life insurance. And I'm worth more dead than alive. Because if I pass away, God forbid, this amount of money is worth a ton. And my family is, they're ballers, right? They got a lot of money if that happens. But if I don't die, then that insurance contract at the end of the month expires worthless. That's what derivatives are. Now, derivatives are also ways to make money. How? Well, step one, do a lot of investment research on a company. If you think there's material upside in the long run, then you can buy derivative products to help you make more money. For example, you can buy a call option, a leap, which means a call option that will expire in, say, 2 or 3 years. And if the stock goes up a lot, you make a killing. If it goes down, you lose this. You can also buy what are called puts, which are like insurance protection. Say you own a stock and you're like, oh my God, I think it might go down a lot, but I don't want to sell it because I don't want to pay taxes on my gains. Well, you can buy a put, which means if the stock goes down, this goes up a lot in value. If the stock goes up, all you lose is this. So derivatives are protection. Now, in the fall of 2008, as mentioned in The Big Short, which I have a 46-minute vlog dropping tomorrow on my YouTube channel. But in the fall of 2008, we were within 24 hours of bank machines not working because of derivatives, as I explain in my vlog coming out tomorrow on The Big Short. And at that point in time, in the fall of 2008, I remember Warren Buffett said that derivatives are financial weapons of mass destruction. So be careful. I don't want my students to invest in derivative instruments. And if you do, I just want it to be very simplistic, meaning buy calls, buy puts. If you underwrite them, meaning sell them, you can lose way, way more than what you invested if you get randomly assigned, which I talk about in my curriculum in a lot more detail. Okay. Okay, Sabet wrote, what do you think about dividend funds? Would it be better if you would invest in index funds because of the growth? Yeah, so if you're going to invest in dividend funds, I strongly recommend automatically reinvesting in the same funds or other ETFs. Yeah. And if you don't have time to research what I do, and do your own research, please, is I personally buy ticker VOO. Yeah, which has a relatively small dividend yield, but I reinvest those dividends as well, automatically. All right, next question is, United States debt was downgraded by Moody's to AA1. Yeah. Not trouble, but will it become impossible to pay back and pull debt interest rate debt longer term? Yeah, no. I'm not worried at all, right? It's still highly rated, and the other ratings agencies like Fitch and S&P already downgrade U.S. debt. Yeah, I don't think it's an issue at all. I'm not worried, not even slightly. The very last company on the planet to go bankrupt, as I've said many times before, is the United States government. It's all relative. Yeah. And then Sabet wrote, what industries do you think will grow over 10 years? I mean, I'm really bullish on healthcare and technology. That's what I'm bullish on. I'm also bullish on smaller cap stocks, if you can find them, where AI is not going to disintermediate them. plumbing companies, hairdressers, salons, that sort of thing, which can also help you from a private equity perspective, because AI ain't going to be replacing plumbers or salons. And a very good friend of mine just sold his plumbing company here in the Bay Area for like $40 million. Private equity firms are paying a lot. So if you have a plumbing company or an electrician-based company, don't give up on it. I promise you private equity firms will be knocking at your door to buy your company eventually, because they have to deploy capital somewhere. Yeah. Okay. All right, next up, Emalakra wrote, by ultra short income ETF, I mean ETF that invests in very short-term debt securities to provide current income with high liquidity while aiming for slightly higher yields than money market funds. Yeah. If you want to do that, make it a small percent of your portfolio, like 5%, okay, or maybe even 2.5%, and read the investment offering memorandum cover to cover, which you have the legal right to do. Okay, just do a search on prospectus and the name of that ticker, read it, and thoroughly understand what derivative instruments are in that ultra short fund, please. Yeah. Okay. All right. Next up, question is, do you think the Buffett partnership model still works today, charging a 25% performance fee above 6% hurdle rate to limited partners? Yeah. Generally speaking, the way it works with hedge funds, private equity firms, and venture capital firms is they charge 2 and 20. What does that mean? Well, they charge a 2% annual management fee. And then what they do is they charge 20% of the profit. So if you invest $100 in a hedge fund and it goes up 100% to $200, you don't get $100 profit. You get $80 profit minus the 2% fee. Yeah. And does this model work? Well, it all depends on performance, right? If you do incredibly well, you can always charge more. You get what you pay for. Yeah. There are some funds that charge a 5% annual fee and 35% performance fee. But it's all based on their track record. Okay. Okay, next question is, you say Goldman hires not the best people. They hired me. So I'm telling you, for sure, they don't hire the best. They actually hire people that get along. Yeah. Because one bad apple destroys a whole damn bunch, and the whole culture of a team and company as well. That's why to get into Goldman's quite often you have to go through 40 different interviews. And I can train you on that as well if you want to check out one of my programs. Okay. Question is, why do most Goldman hire become prime minister, president, or leader of nations? Hank Paulson, Mark Carney. I love Goldman Sachs when I work there, but I will say, I'm always transparent. I understand after working there why so many successful politicians come out of that place. But again, they don't hire the smartest people. They hire people that get along. And I overlapped actually with Mark Carney, the Prime Minister of Canada now. Great guy. Smart, humble, typical Canadian. Yeah, I love him. Yeah. I don't like liberals, the Liberal Party, which he is the head of. I'm more progressive conservative, but I respect him. Yeah. And Hank Paulson, of course, became Treasury Secretary during 2008. Again, I'll talk about that tomorrow on my blog. Okay. And then Center of the Board wrote, I just did that right now. I'm learning well from you. Awesome. I love you guys. And then next question is, what are tips to help you learn more about trading? Yeah. So please do fundamental research first. But if you want to learn about trading, what you can do for free is go to my YouTube channel and just do a search for technical analysis. And you'll see a video I made. I think it's one of the billions one. Oh my God, I talked about technical analysis a lot. Here it is here. Watch this one here. How to use technical analysis to make money. And of course, I preface this with you have to do fundamental research first. But you can check that video out. It's 30 minutes or so. Yeah. And I'm going to be making a lot more YouTube videos going forward. Yeah. Especially because I have a lot more people working for me now. So I can make content and focus on you. Yeah. Okay. Okay. And I won't be able to get through all these questions. So again, anybody in my finance and MBA programs and stuff, I'll see you in 10 minutes on our Zoom call. Yeah. Okay. Let me try to get through as many as I can now. Alfonso wrote, hey, Chris, I love what you do. Your light shines the brightest. Thank you. God bless you. You mentioned a mushroom drink that you used for folks before. What was the ingredients? Again, thank you. Blessings. Yeah, thank you. So what I do is every single Sunday, if I have time, I try my best. What I do is I create 7 big things in blender bottles of drinks. And I juice everything green, broccoli, which actually is good for juicing. Also kale and a lot of other stuff, raw ginger root. And I put whey protein in it, mushroom extract as well. Let me show you the exact product I order. Do your research as always first, please, before you buy this. Okay. And I put this in my morning coffee as well. So mushroom. Okay. Here it is here. Okay. So this is here. I bought it tons of times, as you can see. Okay. It helps with cognitive abilities. I'm sure a lot of the stuff, purchased 26 times. I'm sure a lot of the stuff I bought over the years works, doesn't work, placebo, etc. Okay, so this here is mushroom extract. Helps you think gooder. Yeah. I also take Prevagen daily, but I can't remember if I took it today. And I take Bacopa and lots of other stuff to keep me sharp. Because the older I get, the better I was. All right. Next question. Sabet wrote, what watch are you wearing? I'm wearing the absolute cheapest Rolex you can ever buy. And I bought this, I think I bought this in July of 2004 when I got a job offer from a big hedge fund called Citadel. They recruited my family and I from New York City to the West Coast. Yeah. I like it because it matches my ring and stuff. And I wear an Oura ring. I just got the latest generation one as well, which really helps me. And what the OURA ring does is it tells you if you got a good night's sleep, did you get enough deep sleep, etc. It also tells you your age. My heart is 5.5 years younger than I am right now per this app. And let me show you what that looks like, actually. I'm trying to get my heart down to 10 years below where I am right now. Yeah. So, yeah, in terms of my, I don't know if that's going to work. Yeah. So in terms of my sleep last night, it was good. My readiness is not good just because I'm still jet lagged. But what it also shows me, and this is a great investment, I recommend getting this, you guys can. Here's my heart. So my heart, it says there, 5.5 years younger. I'm getting it down. I'm trying to get it down to 10 years. And a lot of that comes obviously because of exercise, diet, water, etc. Yeah. Mindfulness. And I think one thing that keeps me young at heart, humbly, is every day before I get up, I thank God for 10 things in this order. You got to practice gratitude. It makes you happier. I thank God for Andrew, Matthew, Dylan, my wife, Christine, my mom, my dad, my brother, Jamie, my sister, Katie, who's in heaven with Grandpa, my other sister, Elizabeth, who we call Yaba, and then you, my students. I practice gratitude every day. Then I read one chapter of the Bible. Yeah, it helps. Yeah. Don't worry. Don't worry about stuff. Just work hard and everything works out, I promise you. You know, Winston Churchill once said, I met a man in his deathbed who talked about all the worries he had in his life, none of which came true. And as Dale Carnegie said, it's not work that kills us, it's worry. Hakuna Matata. Things are never as bad as you think. And for homework, what I want you guys to do is this. I want you to read or listen to the audiobook made by Dale Carnegie called How to Stop Worrying and Start Living. Don't you want to be happy today? Yeah. Okay, and thank you for the love and stuff, people. Okay. All right. And then Nintendo wrote, does the Venture Mindset, this book here, have anything about valuation of startups? It's a little bit more qualitative in nature. And when I had Ilya on my webcast last year, he's the #1 professor on the planet at Stanford in Venture Capital. He talked about this book. We went through each chapter. But he also gave 2 really good pieces of advice I think you can all use in your company starting right now. Number 1, whenever you have a meeting, okay, I want you, per Ilya, I want you to make sure that in that meeting, the first person that speaks in every meeting you have is the most junior employee. And the reason is junior employees have great, fresh new ideas. They haven't been biased yet by the company's, culture, whatever it is. And junior employees will give their opinion freely and openly if they're not biased. The worst thing that can happen is if a senior executive speaks first and says, I think we should do X. What do you think, junior employee? Junior employee says, oh yeah, X is a great idea. Yeah. Always have the most junior employees speak first. Okay, it brings new idea generation to the company. Another thing I learned from Ilya is whenever you have a very difficult decision to make, and you do X or Y, when the meeting starts to discuss whether you're doing X or Y, randomly assign one person to argue against what most people think. Let me say that again. Have somebody in the meeting argue the position most people don't want to go with. So if 90% of the people want to go with X and less than 10% with Y, randomly assign somebody to argue for Y. Keeps you intellectually honest as well. All right, we got a couple quick minutes left, and then I do have to go. All right, next question is, what do you think of Japan and its equity and even aging population? Will Japan collapse? Yeah. I'm very worried about Japan. Very worried. I've got a soft spot in my heart for Japan. The first deal I worked on, it was an IPO. Actually, I was a grunt at Goldman Sachs 8 million years ago. Was NTT Docomo. Okay, this is the prospectus for it. Yeah, and this is the largest IPO in the world back then. Yeah, I love Japan, but there are structural issues. People are not getting as married as much there, which is why the population might drop from 130 million today, roughly, down to 80 million in a couple of decades. I hope we figure it out because I love Japan. Love Japan. Yeah, and that's why a lot of the valuations are quite low there. And as China becomes more communist, if they do, I think it's going to be natural for a lot of institutional investors globally to invest more money in Japan. Yeah. Okay. And then Sanjay wrote, hey, Chris, what about Forex classes? I covered that a little bit in the curriculum when we talk about derivative instruments, but I don't really want people to really focus on that because if you trade currencies, you're not going to make money because there's random black swan events we can't predict, like what Trump will say next or what Xi Jinping will say next. I have no idea. Or what economic data point might come out of Germany, for example, or unemployment in the United States. We just have no idea. Yeah. All right. And then comment here from Manas. Thank you for everything. God bless you. See you in 20. Yeah, see you in a couple of minutes during our weekly call. Yeah, and I do daily calls now with my premium MBA students and people in my finance bootcamp. Yeah. Okay. Jayesh wrote, to boost confidence. Oh, good. I asked you guys about this. How do you boost confidence? Yeah. What I do is I work out. I meditate. I focused on hobbies and fake it until you make it. I love it. Fake it until you make it is basically you telling yourself, like the Rodin sculpture, I think, therefore I am. Really visualize success. I love the meditation angle too. LeBron James, before basketball games, you can see him on the bench closing his eyes. And what he's doing is he's meditating. He's picturing himself getting many, many three-pointers. And statistically, if you do that, rather than practicing basketball, it's almost as good as when you actually play basketball. And a lot of sports, like athletes don't have confidence problems. And that's why a lot of Wall Street firms love hiring former athletes. Like the 1980 United States hockey team, which I loved, who beat the Soviet Union back then. A lot of them actually are now on Wall Street, right? Confidence. So, and baseball, think about it. You're at bat. Somebody's pitching almost 100 miles an hour to you, and the ball curves from 60 feet, 6 inches away. How the hell are you going to hit that? It's confidence. And Yogi Berra, a great Hall of Famer, has 10 World Series rings, played for the New York Yankees. He once said something along the lines of this. Baseball is 50% physical, and the other 90% is mental. I think, therefore I am. Yeah. All right. Okay, let me see if I can answer anything else. Oh, good. Aporia, you got that. You got that. I was wondering if you got that. When I said mushroom, a badger, mushroom. It's an oldie but a goodie. Thank you for getting that. I said mushroom twice on purpose. See if you get that. And Aporia, it's so funny because years ago, I sent that video to my mom. It was on a loop. And I said, Mom, watch this till the very end. You'll love it. To the very, very end. And it drove her cray-cray. Hi, I'm 7.5. And Jamesh wrote, we all love you, dear Chris. Thank you. I love you too. Thank you for all you do. I learned a lot about finance from you. This year has been a life-changing year for me already. Awesome. Excellent. All right, guys, I'm going to have to wrap up this call. If you're in my premium products, I'll see you in 1 minute on a Zoom call. And for those of you that are interested in joining one of my premium MBA and Business Academy products, where I give you daily small group Zoom calls and one-on-ones, or if you want to switch to the finance industry and join my finance bootcamp, you can just go to the link in the description and set up a call with one of my staff. Thank you. God bless you. I'm going to end this video with life-changing advice from Steve Jobs. I licensed this video from the Silicon Valley Historical Association. Today we talked a lot about confidence, and this will really drive it home. Thank you so much. God bless you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.